Welcome to Roof to Curb, podcast by Custom One, presented by Pull Tab Sports, the best podcast producer around in the Twin Cities market. So today we've got Granite Mortgage, a division of Granite Bank, and we've got some wonderful guest stars of Josh McCarthy, VP of Sales. We've got Adam Palodichuk, Senior Loan Officer, and Jen Axtell, Loan Officer, Senior Loan Officer for Granite Mortgage. So thanks for coming out.
Yeah, thanks for having us, Todd.
Thank you.
Yeah,
Appreciate it.
Yeah.
Roof to Curb is a podcast that we talk about all things home, obviously from the roof to the curb. Custom One is a company that has a home building division, renovation company, a landscaping company, and an exterior company. So roofing, siding, gutters, and siding. I think I said that twice, but that's what we do. So we're going to talk financing today. We're going to talk some mortgages. We're going to talk about what's going on in this wonderful economy of 2024. We're going to talk about some fun things, try to let people kind of behind the curtain, get them educated on what's going on with mortgages and refinancing and coming out of a crazy time that we had during the COVID boom, if you will, and the last administration, government-wise, that rates were historically low for a long time. So, Josh, let's start with you. Granite Mortgage, a division of Granite Bank, and you are the VP of Sales. So let's talk about why Granite Mortgage. There's a lot of mortgage companies in the Twin Cities market.
Yeah, it's a great question, Todd. And it's crazy. I never thought in my 24-year career that I would be working for a bank in all reality, because we used to say that if you go work for a bank, it's kind of the JV squad a little bit.
Sure.
But what I'm learning as I get older in my career and doing this, what we wanted to be was the human connector of all financing related for the home. So your typical mortgage company, you're not able to do a lot of construction lending, lot loans, raw land for hunting land, HELOCs, home equity line of credits, those bridge loans. We are now able to provide all those things for our customers. And then as my customers are getting a little older, I'm able to now help with their children and open just up simply checking savings accounts, just being that person for them for everything finance related.
Yeah, so you can kind of become that legacy guy for the family.
Correct.
And you know, mom and dad and, you know, the kids, and
Yep.
you've got a personal relationship. Yeah. You do multiple transactions. Pretty fun way to do business, right?
It's been a blast.
Yeah. So I'm looking at the three of you, and I'm trying to add up years, but I'm thinking that amongst mortgage, lending, and banking, we got to have over 60, 70 years of tenure between the three of you.
It's 20 plus. So
yeah, 20 plus.
I'm 20 plus.
Yeah. So a lot of knowledge at the table at Roof to Curb today. So tell us a little bit, Josh, about Granite Bank, though. Where did that stem from? You know, it's a newer bank to the market. In a newer team, right?
Correct. Yeah, Granite Mortgage has only been around for 2 years. They've been a bank. I mean, Granite Bank's been around for 100 years. It's newly about 15 years. The Ryder family bought that bank. Was only one location, and they now have 3 locations. And their goal is to continue to add more locations. And what they've realized is they wanted it to be not a bank that just happened to do mortgages. They want to be a mortgage company that is backed by a bank.
Very different approach.
Very different approach. Yeah. And most banks don't do it that way. Yeah. So what they said is, hey, we're going to go after street originators. So I call people like us sitting here street originators. We go out and we hunt for business. Yeah. We don't sit at a bank and wait for walk-ins.
You're not worried about deposits.
No.
Right?
Correct. Yes. So they started with, hey, we're going to hire lock desk people, underwriters, processors, everything to run a mortgage company before they even had salespeople. So all these salaries that they had. And then they started going after mortgage people now, us street originators.
Sure.
So I came over to head up the VP of Sales, saw this as an opportunity that I can create really a blank canvas from the ground up and design it to be the best place to originate loans at. And then because we're backed by a bank, our interest rates tend to be now a lot lower than your standard mortgage company. So that's very attractive for us as well, to be able to provide that to our customers.
Yeah, as I'm listening to you talk about it, vehicles or products on the table for the consumer, if it's restricted more from the bank mindset, you're probably limited in offerings compared to if it's led by the mortgage division and truly that originator. Now they're coming back to ownership or leaders and saying, hey, I'm getting these type of calls or I'm getting these desires for products. Now, how do I solve that, or how do we create that product? Right?
Correct. That's exactly it.
Yeah.
We just created our own internal product, which we just launched to the field last week. We're on second homes right now. This administration put in 2 years ago, almost to the date, what are called loan level pricing adjustments when you're going to go buy a second home. Second homes used to be the same pricing as primary residence, just required a little bit touch more down, 10% down. So it was pricing people out of the category. So we just launched our own where we're able to do an 85% loan to value on a second home with no mortgage insurance with a 1 point origination.
Can you repeat that, Josh?
85% loan to value, so 15% down, no monthly mortgage insurance at a 1 point cost for the interest rate at 8.25% at today's rate.
So I'm hearing you save on cost on origination. You save on cost on the monthly fee because you don't have PMI.
You got it.
Because you're above 80%.
Yeah.
Right?
Okay. Yeah. So now we were able to create that internally at the bank.
Nice.
We need this product. We need to deliver to our customers because normally that would cost, we save the customer about $15,000 on a $400,000 loan amount in closing cost.
It's a big number.
It's a big
That's
number.
for money, right?
Yeah.
Pays for something.
Well, hey,
Furniture,
especially when you're buying a
blinds.
cabin, right?
Yeah.
I mean, it's not just the cabin that's a lot. It's all the toys. Exactly.
Bolt lifts,
the
all those
docks.
things.
Yeah.
So let's that's great. It's a great story, and I think it's going to have a lot of success, obviously, as it grows in the Twin Cities market and around the state of Minnesota. I don't necessarily know what their goals are as far as are they going to be regional, state-wise, but it seems like
we're nationwide.
Awesome.
Yep.
Awesome. A lot of focus on the last 2 years, watching interest rates go from 3 to 7% roughly. Seen a lot of people take advantage of that. Adam, Jen, you guys originated a lot of deals. Josh, obviously you have as well. The number I've heard is that we've got people, about 85% of the people in the United States with a mortgage are under 5%, right?
Yep.
So let's just talk about kind of the past history of like, what have you guys seen as far as people coming in and rates that they have locked in the last 2 years? Are they on 30 years? Are they on 15s? Are they on ARMs? What have you guys seen? Adam, Jen?
Yeah, I mean, it's traditionally 30 years is kind of that cheapest rate that people took advantage of. A lot of 15s too, and they want to protect that rate. I mean, they're historically low, right? So anybody looking for that move up buy or any reason to refinance, it's tough when you're talking extremely low interest rates, right? So, that lends us to lifestyle, right? I mean, we have rates that are traditionally low, historically low, but people live their lifestyles, and credit cards, unfortunately, are part of that lifestyle.
Sure.
So what we're seeing more and more of are the opportunity for refinances. Even though it's at a higher rate, it might be better financially, cash flow wise, to at least look at the possibility of doing a cash out refinance and just maybe you made some mistakes in your life financially. It's a way to that kind of get out of jail free card of sorts, because homes still are appreciating at historic rates as well.
For sure.
So.
And Jen, you guys see all kinds of stuff coming across the table, right? You see people that are looking for land. You see people that are buying a house. You see, all kinds of different products in the market that people are buying. But what are some of the examples of people that come and originate loans? It's not your, small home with a white picket fence. It's all kinds of different stuff, right?
No, like inventory has been so low. And so I'm seeing a lot of conversation about construction. But now they're like finding that perfect piece of land. So they're like, I'm not finding anything. I've been looking for a house for over a year. Maybe we'll build.
Yep.
And so I'm seeing a lot more talk about construction and what that looks like just to get into their dream home. Their house is too small. They're sick of it. And they're not afraid about the interest rate because they know they want something different. So you have all sorts of types of people and what they are looking for and what they want.
Yeah. So we deal with obviously a lot of buyers. We deal with, it's amazing to watch how many more buyers on the higher price points are cash, right? So we're seeing an influx of that and a transition of that. Even when, I've seen some of our clients at 1.8, like, the concierge level of banking, right? Where they do a deal with the bank that they have all their assets at, and they get some preferred help with that. However that works on the backside, I don't know, but we have seen those rates. So it's interesting to watch as people transition through that. And Adam, you said, hey, we had a lot of people try to take advantage of the low historical rate. Were loan originations like in 2021, was that at an all-time record high, or was that not the record high of originations?
Oh, no, it was a record high.
It was.
Yes.
Yeah.
Yeah, you couldn't keep up.
Everybody came to the table.
Everybody came to the table. I mean, you were taking people from 6% traditionally, which was historically a good interest rate, down to that 2.5% to 3.5% rate. That was a huge savings.
Yeah.
Every buyer was trying to buy at that time as well.
Yeah, I think
so
about
you had refinances and buy that was both historically through the roof.
Yeah, 6% on 500 grand versus 2%.
Correct.
Substantial, right?
Substantial.
$2,000 a month difference.
Correct.
Right on 30 year.
And I missed that boat. I haven't seen that yet.
The funny part when you say that, right? I'm in the business, and to refinance my own home, the rates were getting so low. I even missed the boat. Now, don't get me wrong, I got it done, but I was too busy helping everybody else.
Yeah.
That I'm like, oh my gosh, I got to get mine done.
Yeah. Should probably get on this. Roof to Curb podcast sponsored by Duke Cannon. Don't trust your mutton chops and mustaches to just any brand. Duke Cannon Supply Company makes hardworking grooming products for hardworking guys, and their products will help you keep your facial hair in championship form. From their beard wash and balms to beard oil, they have your back and your face covered. Duke Cannon. Work harder. Smell better. Stock up on DukeCannon.com and use BEARD10 for 10% off your next order. Duke Cannon is an official partner of the Minnesota Wild. So we got this impasse of rates go from historically 3% to 7%. People are like, oh my, what are we going to do? It's 7%. And you're like, hold on a second. Historically, 7% is not bad.
Correct.
It's not
right?
bad.
Yep.
So how do you guys walk through that with a client where they call in and they're like, hey, obviously 6 is better than 7 and 5 is better than 6. How do you help them? Adam, Jen, take that and run with it. How do you help them navigate that? Like if I call in, what do I do?
Yeah, I would say just every client's unique, right? And every client has needs. So, the starting point is always listen. Listen to what people, what their dreams are, what their thoughts are, what they want to accomplish. Anything that wraps around their financing.
Sure.
Step one is listen. Just hear what it is. And then, I always say our job as originators is to provide the options to the client. Their job is to make the decision at the end of the day, right? So and there are a lot of options out there.
Consultative approach,
absolutely.
Right?
And so, in a market where there's unknown, right? Let's face it, nobody has a crystal ball. People ask all the time, what are rates going to do? Should I wait? Should I? It's always a good time to buy, right? And there's always, and part of that consultant is get them to look big picture. That the mortgage is a big piece of your financial puzzle.
Huge.
But so is other things. Like where can you cut costs to afford a house? That is it the cable bill? Is it the cell phone? Is it these other things that you're just used to, but you're also paying a lot of money for those too. So are there things that could bridge that short-term gap to affordability?
So
right?
Comprehensive debt analysis, right? Is what we're talking about.
And that's our job is to just get them to be open-minded and think in other ways other than just interest rate, because people get caught up.
Sure.
In that.
I think the other part too, and you and I had this conversation, Josh, the cost of waiting. So customers are just not educated on, yes, you're paying a higher interest rate, but what's the cost if you wait 2 years? We don't know what that's going to be either.
Correct.
So are you going to wait and give up maybe your dream home or somewhere where you want to live because you're waiting for that rate that may not budge?
Because that house is going to continue to appreciate.
Right.
So now in that year, if it appreciated 12% and the rate didn't go down, you just lost out on that window of a 12% appreciation.
Right. And that's the fun part of our job is showing them that, letting them see that. And I think that having that visual is super important to make decisions.
And Jen, you've spoken in the past of helping client and navigate exactly what Adam's talking about, where you give them a couple different options and you show them the cash flow and you show them, different rates and products, right?
Yep.
So that the client can be educated.
Yeah, absolutely.
Yeah. How long does that process take? Is that a long process? Is that a 30-day? Is that hey, how quick could I expect to see some data so I can
think
navigate?
that's instantaneous.
Yeah.
It doesn't, I would never make someone wait, especially like making a decision on a home that we know there could be 30 offers on. So I think just educating them right away, and that's just sitting down and showing them on a piece of paper.
Yeah,
and
it's an appointment. It's a 30-minute, 45-minute process.
Simple process.
Answer for them.
So pretty quick.
Yeah, it's pretty quick. And I think the other thing, Todd, to go back to your original question, as far as historical rates of 3% to now let's just say around 7%, right?
Sure.
The consumer's mindset now has shifted. It's been long enough now since the pandemic where those interest rates have been up for a year, right? So the hardest challenge was for those consumers where you're quoted 4 or 5% right now, and within 6 months they went dramatically up. So now we're far enough away from that finish line of where they were. Now it's just the normal. So we're kind of just right back to that. Now the customers aren't saying, "Oh my gosh, I want that 5% or 4% rate." I want them to come back as fast as they can.
Sure.
But at the end of the day, this is historically pretty good. I think they're going to come back down here, but not dramatic like they were during the pandemic.
Yeah. So a lot of times they say, you take the stairs on the way up as rates go up, and then you take the escalator or the elevator on the way down, right? Yeah. And this might be one of those times where actually the elevator's not there, right?
Yeah.
You actually might have to walk back down the stairs. So, and there's some fear in the economy, in the marketplace, where if they lower mortgage rate too quickly, I've heard as much as 20% increases of value of homes.
Correct.
Right. So they're trying to balance that, and I get it. The whole, housing bubble and watching people see rates go up, and then there's this concern of the housing bubble. I personally think the Twin Cities market's in a really good spot just because of the lack of inventory, for one. Secondly, it doesn't have crazy home inflation, that hyperinflation, if you will. It's somewhat protected. So our peaks and valleys are much closer than if, I lived in Miami, LA, New York, those kind of areas, right? Talk a little bit about maybe just from a data, or what are you guys seeing from housing bubble, and maybe how it ties back into, rates were really low, lack of inventory on the street, no home inspections. How did that impact the business? How did that impact realtors and clients to navigate that? So question is, housing bubble, is that coming? Is it not coming? What are we doing with it? Secondly, how are you helping people navigate the sales process as a partner to help them get the home of their dreams?
I'd love to take the housing bubble because I feel like we get asked that quite a bit. People are still sitting sometimes on the fence waiting for that housing bubble. And I think we have to look at history in order to predict what's going to happen in the future. And I just go off of a lot from me as my own personal experience in this industry for 24 years. So I go back when I started in 2000, all of us here at this table. And if we think about it, somebody in 2001, 2002 could have bought a home. Let's just use easy math and say $200,000. And legitimately back then, those guidelines were so loose.
Sure.
They could put zero down. 0% down and have marginal credit, and debt to income ratios could be over the threshold.
And how do I have to show my income?
Well, again, we had all these ninjas stated. You literally could just tell me you made X, and I would have to take that at face value. You'd
Bar napkin.
Exactly. Now it was great, right?
Yeah.
People got into homes. But unfortunately, what happened was 6 months later, they could refinance their home. And let's say now it's worth $250,000. Again, there was no layers put into place. They could go to 100% loan to value on what's called a cash out. So now they took that cash out. Let's just say 6 months or a year later, they did it again. Now it's 300 or 325 cash out. Another year, they do it again. Now they're into this home for $400,000. They took out $200,000 of cash with zero down.
Yeah. And the home's worth what?
And the home now, let's say it's worth 400, right? Yeah. But now we go into a little bit of a ripple into the market. Homes depreciated a little bit. They went to go to refinance again because they were probably on an ARM or something that was unique. And now the home was worth 350, and they're going, oh my gosh, well, what happened? Well, you can't refinance. So they end up just letting it go because they had no skin in the game. Now we fast forward to today. So we ask about the housing bubble. Come back to that. This is why I believe there's going to be no housing bubble, is because those layers, those risks, and those guidelines are back to the way that they should have been.
Yeah. And
you can only go to 80% cash out on a refinance.
Collateralized.
You got to have down payment money into the game. You got to have credit scores. You got to have income. And those things are, the checks and balances are back into place.
Yeah.
And Adam, you mentioned something earlier. You said a word, and I love it, is lifestyle. I think the younger generation, because I guess I'm no longer considered the younger generation. But they've seen an uncle, maybe a parent or somebody go through a foreclosure or losing a home. So even when we get them pre-approved and we let them know their max buying power, we'll say is $500,000, they're only buying, and I don't say only, but they're buying for maybe $300,000.
Yeah. Because
they say, hey, my lifestyle is this. I want to travel. My entertainment budget is this. and this is how I want to live. And I love that. And I took that coaching from my clients and I now use it in my presentation and talk about, hey, here's your max buying power, but let's talk about your lifestyle.
Yeah.
How do you want
Different
to budget
things.
for this?
Yeah.
Yeah, because qualification and affordability are two totally different things. You're going to qualify for more house than you probably want to afford.
Yeah.
That's how the system works. And that's our job, is to get them to think outside the box of, hey, you may qualify for this house on paper, but can you really afford it given the lifestyle you want to lead? Right. So
For sure.
it's very important and it's appreciated. I mean, that's taking those extra steps is the difference, right? And just proper consulting your client.
Yeah.
Right.
Jen, any other thoughts on housing bubble? You got any?
I think you hit it.
Sorry?
Can I hit it?
I think you did really well.
Well, thank you for that. I appreciate that.
Good job.
I phoned a friend earlier.
There's lifelines available.
I gave you that tool.
Thank you.
Rates. So everyone hears going into, let's set the table. Going into 2024, media says, hey, rates are going to drop 6 times this year. Rates are going to drop 3 times this year, right?
They go back and forth.
What they're speaking to is a Fed activity, right? There's a guy named Powell that comes on and he waves his wand and he says up a quarter, up a half, up a point. And I think the general consumer says that's what's going to happen with mortgages, right? And then they haven't done anything in 2024 for the first 4 months, 5 months. Another meeting's coming up in June and it might stay flat. It might go down a quarter, probably isn't going up at this point, but we see some kind of reduction. In mortgage rates follows that, right?
Well, yes and no.
Yeah,
Right.
I'm setting you up here.
Yeah, I got that. Okay, so make sure we're going with that. So no, those are short term, interest rates on credit cards, car loans is how that is affected.
Yeah. More consumer debt.
Correct.
Yep. Smaller loans. You're buying some furniture. You're buying a car. You're buying fitness equipment.
Yes.
Right.
Yep.
So you're telling me the Fed rate isn't tied to mortgage.
It is not tied to mortgage.
So in the first half or the first 4 months of 2024, mortgage rates have dropped, but the Fed rate didn't move.
Correct.
Why is that?
Wow, Todd, you're putting me on the spot here.
I'm glad he asked you.
Yeah, well, Jen, you want to take that from me? So here, Todd, I mean, that's a very in-depth question. At the end of the day, it's based on your consumer index of spending. It's based on inflation. There's so many different factors that go into that, right? At the end of the day. I don't like to sit here and pretend I know all those indexes, to be quite frank with you, because it seems like every time I think I do know it, and I try to educate a consumer on when they should lock or not lock, I'm wrong.
Sure.
So I used to say, depending on how much Trump tweeted, is what interest rates went up and down, because they do fluctuate quite a bit.
Yeah.
But at the end of the day, we all pay for services that economics that are people that are much smarter than us to tell us when to lock, when to float, on the interest rates. But right now, the forecast is they were supposed to drop already this quarter a lot more, and they haven't. And all the indicators they soften, and all the indicators say they should have dropped a lot more.
Sure.
So you ask why,
Yeah. So it'll be interesting to see the pent up demand. And I want to tie this back to where do I start the process? Pent up demand of housing. We see inventory shortage. We see a pent up demand of rates holding and not dropping. So the consumer maybe has a lack of confidence today, right? And I think that's probably what's driving majority of it. And then they see rates up and they're like, I think I can get a rate less. Why they're waiting for rate to drop, housing cost and prices will continue to rise, right?
Right.
So it's an interesting time when unemployment rate reports are coming back and economy seems fine, but yet we've got consumer spending on the uptick. We've got a lack of savings going on with the consumer. So there's some indicators going on that, the seas are getting a little rough, right? So where I want to tie it back to is if I'm Mr. and Mrs. Smith and I want to buy a house and now I have to do an inspection. Now I got to get a realtor. Now I'm going to talk to a builder, all those kind of things. Jen, who should their first call be when they're out looking at homes?
Me.
Well, it's true.
It's true.
Right?
They should be calling me. Yeah. I forget the question that you asked right now.
We're talking about where the client would start with. They're going to talk to a mortgage originator.
Yeah. You know,
right?
here's the thing too, is like, and what happens is with the market the way it is, and everything moves so quickly. I find it funny that there's a lot of people that will call and say, I love this house. I went and looked at this house and now I need to get pre-approved.
Yep.
And in that meantime, in which we can do that fairly quickly,
Correct.
they should probably have that in place before they're going and looking at homes and they find their dream home, because there could be 30 offers in 5 minutes. It's just, that's how it goes. And so you need to do the work before you're out looking, just to have the process in place so that you can make that offer.
Well, we get consumers or people in the market that go out and they're like, I love this house. I want to make an offer on it. And in fact, I did make an offer on it and I put earnest money down.
And I'm not.
Do you think I can qualify?
Right.
Right. So,
and you want to make sure that those are in place.
Well, in order to even put an offer in, right, Jen, and we'd all say at the end of the table, you want to know your numbers to make an educated decision.
For sure.
At the end of the day. I mean, there's so many things that go into that decision factor. You may love the home, but then you find out what the payment is, because homeowners insurance as well is one of those other factors that
Keeps moving around.
is raising as well.
Yeah.
So definitely want to know your numbers before you go to make a decision that big.
For sure. Good real estate professional is going to ask for pre-approval before they submit an offer as well, right?
Yep.
So they're going to be like, hey, Johnny and Betsy, why aren't you pre-approved? So,
Now, the pre-approval process, I think it's important to talk about, is since we're here talking about all things related to financing, right?
Yeah.
Is, a lot of customers will ask us, is there a fee for this or is there an obligation? I always tell consumers, just because you get approved to buy a home and you get pre-approved doesn't mean you have to buy.
Yep.
It just simply means you're prepared. That's all it is. And so there's
One
no
step
cost.
closer.
There's one step cost, no obligation. And the other piece of that too is, let's just say your credit scores weren't quite there. That gives us time to fix them.
Yep.
And what I mean by fix them, maybe you just have one credit card that's just maybe maxed out a little bit. And you normally pay that off, or you have the funds to pay that down a little bit. Just simply by paying that balance down a little bit could increase those scores 20 to 40 points to get you even a better interest rate.
Right.
So there's more that goes into just getting you pre-approved. It's, hey, you're at maybe a 700, which is a really good credit score. But we can look at this and say, hey, I can get you to a 740 in 30 days, which could give them a little bit better interest rate.
Yeah, a little credit management.
Correct.
Right?
Yeah.
Yep. So strategically planning.
Yep.
And just because you own a home doesn't mean you can necessarily get pre-approved to buy the next home.
Yeah.
A lot of customers, hey, I'm in my home. I was already pre-approved before, so I'm just going to go work with a realtor and put an offer on this next home. Well, people just assume because maybe one of their spouses was full-time at the time when they bought their job, when they bought the first time, and now they went to part-time, but they're making their payments.
Yeah.
Well, I can still use that part-time.
Yeah. So let's go down that path. Let's talk about loan criteria, right? So Josh said 700 is a good credit score. Adam, if I'm going to buy a home, is my credit score good or bad? Do I know? How do I qualify for the best rate? Loan to debt, debt to income. What do you suggest? What are criteria? What are you looking for in a?
Well, all that. I mean, there's so many factors that go into the ultimate qualification, right? Credit score is a big piece of it. Debt to income is a big piece of it. Assets are a big piece of it. So all those, call them spokes in the wheel, are equally important. And consumers do assume, I'm fortunate enough to work with a lot of more affluent, wealthy people. And just because you make a lot of money doesn't mean you qualify for a big house. Because, for example, you may be self-employed. You may have a lot of write-offs. So all that factors into how much money do you really make?
Tax return looks a little different, right?
All these things. And, did you switch from a W-2 wage earner to now you're self-employed? Is there a time frame in which you have to be self-employed before you can qualify? So just the knowledge of, again, navigating through all those things that go into qualifying, like Josh said too, the credit score, these things are more times than not fixable. The earlier you get to the table of wanting to qualify, the more time we have to fix any flaws that you might have, right? It might not be open heart surgery, but we got to, burn off that wart,
Couple
right?
stitches here.
So
But I think it's important too, Adam, to talk about credit scores, right? Like, don't be afraid a lot of people are using apps now, Credit Karma.
Sure.
They're using their credit card app, kind of giving them an idea where their credit scores are at.
Yeah, a lot of credit cards.
Do you feel like that's really close though?
No, it's not, but it's gotten better over the years, but it gives you a good idea. So just because somebody has that app, let's say they got Credit Karma and they're at, I use 700, for example. So I think we should identify to the listeners that the credit scores go from 350 to 850. Now, we typically don't see them below 500 in all reality, but that's where they go. And we typically don't see them really even above 800 that often. So if we can get you between a 600, if you're at about a 600 credit score, that's suffice to buy credit or to buy a home.
So if I had a 600 credit score, there's a chance I can qualify.
Even below 600. I mean, we can go down. Okay. So we can go down to really 500. Just requires more money down. But your average consumer, we like to say 580 and above. That's kind of a rule of thumb.
Okay.
But in the, because there's different programs. It's called a conventional loan and an FHA loan. So your FHA loan, which is a government-backed loan, it's a 30-year fixed. It used to be in the old days, most first-time home buyers went FHA. I would say that's not the case anymore. We're still getting a lot of conventional people in.
FHA has a limit to it, Josh?
It does.
A top limit of value?
Yep.
What is that? Any idea?
Oh boy, I should, Todd. I love the details, and I should know
Go
this.
to
We should
Google.
go back to this because it just changed in 2024.
Yeah, well,
let me put my cheaters on here. And,
so it continues to change. It's kind of part of the problem.
It does.
Right? So it's not that Josh
and it
doesn't
goes
know.
by and it goes by
moving.
county. But the Loudoun County metro area, I want to say it's like 523.
Yeah, 523,000.
523,000.
Yeah. So if you're above that or somewhere close to that, you probably don't qualify for FHA, a government-backed loan. Then you're going into a conventional loan. Is that
correct?
Accurate?
Yep. But on the FHA loans, your credit scores don't really matter as much. The government says, hey, just because you have a 600 or 700 credit score on an FHA loan, it's the same interest rate.
Oh, okay. So it's not. There's no scale to a 580 could get the same interest rate as a 720 credit.
Well,
score.
now we get 580. There's a little bit bump when you're below 600. So
600, 620, and 720.
Yeah.
Okay.
Yep.
What are some of the other loan criteria? So we talked about there's FHA, there's conventional. These are products.
Yep.
And then there's a jumbo.
Correct.
Right? So conventional covers you from 523 or 500.
Yeah, it's 766 for conventional.
766
and below is going to be your conventional financing.
Yep.
And then above, you're going to get up to your jumbo financing.
Okay. So above the 760-ish, 800,000, you're going into jumbo. And right now, jumbos are running at the same rate as conventionals. Are they more expensive, less expensive?
They're typically a little bit higher.
Okay.
Yep. But they're right in the same wheelhouse.
Okay.
Yep.
So back to, I want to buy a home. My first call should be
100% should be to a loan officer, because then you can strategically start planning. If you need any credit repair, you can really get your numbers, dial in to know where is my budget at, and what do I want to do. And the other thing, Adam brought up being self-employed. Right now, yes, tax season just technically just got done. Usually I see a lot of self-employed people like to file extensions.
Yep.
This is also your time to meet with your loan officer.
Sure.
We advise all the time when tax season comes around, get us your tax returns from your accountant. Don't file them yet, but just get us a draft. And then we can let you know where you're at. And then if you want to make any tweaks to then your tax returns to qualify for more,
You can help navigate that.
can help navigate that as well.
Sure.
Yeah.
Sure.
So the debt to income ratio is a big thing. It's just basically it's your income. At the end of the day, we're going to be using your gross income. So not your net, not your take home. We're going to be using your gross. So if you're on a salary of $60,000 a year, we can use the full $5,000 a month to qualify you for a mortgage.
Yeah. And what do you guys use as a percentage? So if my gross income's $5,000 a month, what's my max as far as, Adam, you're talking about affordability and payment of what you want to buy and what you can buy is two different things. But what do you guys use, Jen, Adam, for percentages of that $5,000 a month? Is 20% of my income my house payment? Is that a good number? Is it 50%, of my spend per month? How would I guide myself through that?
Yeah, it's 50% is rule of thumb is your max.
Okay.
So you got $5,000. We're going to use $2,500 of that to qualify for a mortgage. And then we got to go one step further on that, Todd. We have to then subtract any minimum payments that you have on your credit report minus from that $2,500. So let's say you have a $500 car payment and you have $100 in miscellaneous payments for credit cards.
Down to $2,400.
Yeah. Well, $500, now we're down to $2,000, now we're down to $1,900.
Yep.
Full PITI, principal, interest, tax, and insurance.
Sure.
That would be your max mortgage payment.
Roof to Curb is sponsored by Will Anderson Insurance. I want you to try a quick exercise for me. Think of your insurance person. Okay. Can you picture them? It's probably some person from high school or the old neighborhood that you no longer keep in touch with. Insurance is too important for the status quo. Isn't it time you switch to one of the best? Will Anderson can help you with all of your home, auto, and commercial insurance needs. He'll give you a fair solution. He'll be there to pick up the phone when you need him most, and he'll explain a complicated business like he's reading a children's book. Reach out to Will Anderson, and we bet you he'll save money too. Call or text Will for a quote at 612-361-7283 or visit willandersonagency.com. You guys talked about a really consultative approach, right? So don't be afraid to reach out to your loan originator. Don't be afraid to reach out to Granite Mortgage. Not only will they help you with products and loans and what works for you, but you're going to help from a consultative standpoint of credit repair, right? So, Jen, you've gone through some credit repair with clients.
I think sometimes those are the best. It's what do you do? It's easy when it's a yes and it's just green, go. We can get the loan done. But to solidify that relationship, right? So what do you do with the no's? And I think that's super important to me of like, not just sorry, it just didn't work out. It didn't work out today. But if you listen to me and I can offer some advice and you do those things, pay off some debts, get in a better spot, it can be a yes in little as a month, maybe 6 months, but let's get you ready now. And I think that's a fear in people. Like, I'm just not going to apply because I'm fearful that I will get a no. And a lot of times it's a yes, but sometimes it's a no right now, but let me help you. And so that's super important part of our job is just not letting those clients walk out the door, but to really help them so that they can get into the home of their dreams.
And I love credit repair stories, just the fact that I believe we're in the business of telling stories of just. And me personally, when I bought my first home at a very young age, I was at the point where my girlfriend, now wife, we went to go buy a home and it was, hey, we need both your incomes, but sorry, you young 21-year-old young man, you didn't pay any of your bills. Oh, you mean putting them in the junk drawer?
I had to do that, huh?
I did not have great credit when I was 21. And that loan officer at that time recommended I did credit repair. And this was before the internet. So you had to go to the post office and do the certified mail. And it took 90 days just to increase my scores enough. Then we went out with the agent and we bought a home. It was the best thing I could have done. And I remember to this day that the agent was using words equity. And I'm like,
things we didn't know.
I don't know, what is equity? And my first home that I bought, I pulled up to it and it had a peach garage door and a peach front door. And it was a brown little Rambler in Cottage Grove. And I said to Sherry, her name was, I said, Sherry, I'm not even going to go and look at this one. She goes, what are you talking about, Josh? I go, it has a peach door and a garage door. And she goes, you can paint those. So first time home buyer, I wasn't even taking ownership yet in my mind. And it was the best thing I ever did. 89.9, 4 years later.
We bought the house with the peach door?
Bought the house, painted it, sold it 4 years later, and we made $40,000. I was able to take that money and built a home. Then back then it was Orrin Thompson, and built with them. And I was able to put 20% down to have no MI because of the home that I bought here.
Sure.
Then that next home made a lot of money and went and built actually a custom one home.
Nice.
Makes you very smart.
Right. Just a great builder. So
it all ties back. So
Josh hit on something pretty important too, that a lot of customers in their brain, 20% down, right? I need 20%
automatic
down.
That's all you need to share.
I mortgage insurance is evil. I don't want it, whatever. Which is great. I mean, it is nice to have that money to put down. However, with what I'm finding in our younger clients, they may have that 20% down and that taps them, right? I mean, that exhausts all their cash.
College debt conversation comes into play.
Right. So, again, going back to the consultant, kind of approach is, well, let's run the numbers at 15% down, 10% down, and see what mortgage insurance really means to you each month. And it may be only $60, $80 a month. Well, you're saving 40 grand in cash. Yeah. Sure, you might be paying $80 more in your payment, but you can get a lot more mileage out of that cash in different ways, right? I mean, maybe you got to fix up the house. Maybe you just want a nest egg. It doesn't matter, but just the fact that you're offering options can be the difference in someone's moving forward lifestyle. That's your get out of jail free card is your cash.
Especially younger couples purchasing a home. Maybe there's some babies on the way, right? And that costs money. So like cash is king, right? Holding on to that cash is always nice. And we talked about the 20%. What's the lowest, Josh? You talked about 0% before, but 3%, 5%, 10%. There's some different programs out there, right?
There's a myriad of programs. Depending on what your needs are, what your situation is, you can literally get into a house for $1,000 out of pocket. There's certain programs that offer that. Are there restrictions? Yes. Going back to our previous conversation on credit, sometimes you need a minimum credit score to qualify for those programs, but they're out there. So just to, shoot them off one by one right now, there's too many, right? So there's there's a loan out there for everybody.
Sure. Turn the TV off and call Granite Mortgage.
Yeah, I mean, it's just
I think we can touch on
Yeah.
a couple though, because for the listeners, right? Like if you're a veteran, I mean, the VA loans are incredible. I mean, they're zero down.
Zero down
for veterans.
For a VA loan.
VA loan.
Military
And there's no MI on those.
Yeah.
So you want to talk about a great product,
Better
right?
cash flow, less money down.
Yes. And then Jen, I mean, up in, the rural areas, right? We have that rural development loan,
Yep.
USDA loan. That's
Yep.
a zero down program. And you can get into something even just a little over in Hudson, Wisconsin, kind of out that way. Those will qualify for rural development,
Yeah.
which is a zero down program.
So numerous products. Rural, VA, medical, right, Jen?
Medical
There's a
professional.
medical
Yeah.
program.
Yeah.
So
Yep.
I'm a anesthesiologist, or I'm a orthopedic surgeon, young out of school, and I got a bunch of debt that Adam talked about.
Yeah.
What
and
was
now-
the criteria? Medical, what, I don't remember.
You talking about the doctor program?
Yeah.
Yeah. So just a medical doctor, basically they have their MDA.
But there was other categories in there, like paramedic. I don't remember what it was.
Well, then we have our own first responder program
That's what it
internally
was.
that we're
That's
giving a
what it
credit
was.
back for first responders, frontline workers.
So Granite Mortgage
is
has
stepping
a
up for our
first
frontline workers.
Frontline workers program.
Yep. Yep. And
Talk about
we're giving back $400.
So
I just think it's a great program, so that's why I
fire,
wanted you to touch on.
EMT, police,
Yep. Teachers.
teachers. Okay.
Yep. The frontline workers.
Is this like the definition of a frontline worker that was defined during COVID?
No, this was our definition.
Your definition.
Yeah.
So Grant's got a definition for first line workers.
Yeah.
And you guys can help out people that are in certain fields.
Correct.
It's worth investigating.
Yep.
Right. And talking to a senior loan officer like Jen and Adam. And you get more education. So, repetitive conversation we're having here, but it all starts back.
It all starts back talking to your loan officer at Granite Mortgage.
Yeah.
Little plug.
We've talked about a large percentage of people that have really low mortgage rates, right? 3%, 4%, less than 5%.
Yeah.
But you know what? I've got some reasons to pull equity out of my home. What are the best ways to do that? How do I do that? Is there a way that works better than others? Maybe it's credit card debt. Maybe I'm buying a boat. Maybe I'm getting an RV. Maybe I just want to take money out and put money aside, or I want to put it into landscaping.
Yep.
Is there suggestions there? Is there best ways to do that? I don't want to lose my 3.5% mortgage, do I?
Well, I sure wouldn't. Second mortgage lines of credit are always an option as well. I'm not going to speak specifically to that because typically that's another kind of brand of what we do. Sometimes those are referred, that's not a first mortgage. But again, in our position, that is an option that we offer, to the consumer to say, look, a cash out refinance, this is what the implication would be to you'd have to refinance out of your current rate. A second mortgage line of credit, you'd be able to keep that rate and then just tap into the equity with up to, some programs go up to 90%, and then you can make that determination.
90% would be a loan to value
correct.
on your collateral.
And then you look at whatever
asset.
that, what that rate is, because maybe it's consolidating credit card debt, for example, right?
Yeah.
And you're paying 26% on credit cards. You could pay 8%, maybe, let's just spitball, on a line of credit. Is that better for you to, chunk away at that rate versus 26%? Again, that's a conversation.
Manage your debt a little bit better that way, right?
Yeah, when you look at that, it's one thing I love when my past customers call me and they're like, "Hey, I was thinking about doing a refinance, and they only want $10,000, and you're looking at doing a cash out refinance. And you look at the closing costs that are involved in that, and then taking them out of that, like Adam said, that 3.5-4% rate, we'll just say, and we're like, I'd be doing you a disservice if we did a cash out refinance. Let's look at doing a line of credit, a second mortgage." At this rate, and then give them that decision. But we are seeing, though, now more people doing cash out refinances than we have in the last, I would say, couple of years for myself. And it is because of the consumer debt has increased. Inflation is real. We are feeling it.
Go to the grocery store, right?
Right. I mean, it's crazy. I don't eat out very often, like fast food. I'll have to admit, I went to Taco Bell last week, And
What about last night, Josh? Did you have any fast food last night?
oh my gosh, I did. I'm sorry. Gosh, why you call Todd?
Not very often.
You're really calling them out.
I did. But I typically don't. Yes, right?
Butterburger.
But I went to Taco Bell and it was $16. I could
It's
not believe it. Do you
crazy.
know a chili cheese burrito now is almost $4?
Yeah, there's no dollar menus anymore.
I mean, right?
Yeah.
Chili cheese burrito.
I've never had one of those.
Oh my gosh. They're the best.
All right.
So maybe that's the question. If you were going to Taco Bell today, what would you order at?
Yeah.
Yeah, I'm staying away from Taco Bell.
Jen, you got a specialty item on Taco Bell's menu?
We just had Taco Bell like a week ago.
Make a run for
Everyone
the board.
gets quesadillas. That's the thing.
Usually you don't eat Taco Bell before 10 p.m.
No.
right?
Yeah.
So it's a qualifier there. How about anything else? You guys, consumer wise, we're talking a lot consumer wise, but who are your partners? Who do you get business from?
Yeah, great question. I mean, that's obviously real estate agents.
So let's talk about that. Real estate agents is one of them, and I know there's more.
Right.
How does a real estate agent, whether it be from any of the big brokerages that you see in the Twin Cities, there's a myriad of them, right? There's 3, 4, 5 of them that are pretty good size. How do those real estate professionals work with Granite Mortgage, and how do I start that relationship, and why would I start that relationship with Granite Mortgage?
Well, first of all, I'd say financially speaking to the agent, take the consumer, the customer out of it right now, and just call it is what it is. Everybody's paycheck is tied to the mortgage guy. Okay, if the loan doesn't close, nobody gets paid. Okay,
Yeah.
so that's
I thought it was
you
the
have-
appraiser.
Yeah.
Well, he has a stake in the game.
Yeah. So you have to be able to close loans. You have to do for the, at the end of the day, for the consumer, what your job is, right? You have to close loans. And so that's a big piece of it. Now, going deeper, there's a lot of different factors of the why, right? Everybody's got a guy, right? Everybody's loyal to an extent to whomever they work with. And we appreciate that because we want loyalty too. But at the end of the day, it comes down to people. And do you answer your phone when someone calls? Do you do the things that make the client experience a client experience in a positive way, right? So there's so many factors, but there's a human element to mortgage, right? And people do mortgages. We're not there yet. AI isn't taking over the mortgage industry. It may someday, but right now, people do mortgages, and you have to trust who you work with, right?
Mm-hmm.
You have to close loans. You have to call people back. You have to be proactive in offering information before you're asked for information. That's huge. Just the connectability to the customer, to that agent. Where's the loan at in the process? Are we on track? Are there any hiccups? Communication is key there too, right?
You can never over communicate.
Yeah. And it's just, how do you win someone over? You just do a good job, right? And then don't be afraid to start up conversations. When you're at a closing, you may not know an agent. Just strike up a conversation. Be personable, right?
Sure. So you
show
guys,
that you have that in you to,
Service
not be a
that.
cyborg, right?
Right,
And literally
right.
be a human being that is compassionate to the process.
Yeah. So
And
you get,
education piece, like what can we offer? They want to know in their industry, and so if we can provide that and offer information, I found that they're always willing and open to listen and have that education piece.
yeah, especially as tools expand, right? Product offerings, numbers change, FHA, conventional. Accessibility, you guys just work 8 to 5?
No.
No.
I had to work in my closet the other day when my kids were yelling. I was in my closet.
Yeah, and mortgage, you better be prepared to, non-traditional bank, right? 9 to 5, right?
Yep.
I always say you live a lifestyle, you don't work a job, right? You literally, that's what you take on when if you want to do it right in mortgage, right? Because people don't buy houses Monday through Friday, 9 to 5, typically, right?
Yeah,
So when they're out on a Saturday and they need something, a question, a pre-approval, you better be accessible.
Yeah,
right?
and
It matters, right?
And that's what I'm hearing, Adam, is, you, Jen, Josh are all accessible, right? So
Yes.
you're there for your realtor
We live in an
partners
instantaneous world, and if you don't answer, they go to the next because everybody wants an answer right now. And so we have to be available. We want to be available.
We are available.
We are
want
available.
to be, exactly. I think, it's important to talk about, for us sitting here as street originators, a lot of people, we're not paid until the loan closes. People are afraid to use the word commission, but I love the word commission as a consumer. I love to know I'm working with someone who gets paid on commission, because to me, they're going to do and earn my business and really, really follow through on what they say they're going to do.
motivated to help you too, right?
Yeah.
Especially on a consultative approach, that some of the things we talked about.
Correct. So we have to wake up every day and be athletes and perform.
Yeah.
And that's what we do. And we hire only the best. We have the best technology, great interest rates being backed by a bank. So people want to work with us just because of our communication, that we have automation set up so that nothing's ever missed or left behind.
Sure. So you've got consumers that call you directly. You got realtors that would reach out and use you as a partner. Who else? Who else would be a partner for you?
We're sitting at the table with one, builders, right?
builders.
I mean, you want to control the process as much as possible. You want to trust, right? That peace of mind, who I work with, who I refer my customers to, do they represent well, right? So that's huge. I mean, we reflect directly on whomever refers to us, right?
Financial planners is one. Divorce attorneys is big. We have a lot of divorce attorneys.
Sure.
You're going through divorce. You got to figure out, if you own a home, you got to figure out how that's gonna happen.
Somebody needs a house.
And you guys can consult on that, and you're sensitive to it. And
Correct.
You obviously have had people that have come to you in that situation. So,
So those are the major ones: is real estate builders, divorce attorneys, financial planners,
And then the referrals.
It's just word of mouth, right?
Yeah.
I mean,
Referrals.
you do right by someone. It's amazing how the cousin and the aunt and the whomever just said, "Hey, you worked with these. You had a great experience."
Those are the best calls.
Those are the best.
I worked with Johnny and he loved you.
So you work through a neighborhood, or you work through a family, right?
Yeah. I mean,
why would you go anywhere else if you're getting service and you're getting consultative approach that, I had a 30-day blemish on my credit report, and they helped me get through it as quickly as possible so I could still get the house of my dreams with the peach door.
Correct.
Right. So, whatever it might be.
You are paying attention.
A little bit.
Well, and just that piece of going back, the no judge. We don't judge, right?
Yeah.
I mean, nobody's perfect, right? And it's all confidential, and it's it's professional.
Yeah, it's
really,
confidential,
at the end of the day,
safe, right?
Yeah.
Absolutely. And I think that's that mental block a lot of people have is, like Jen said previous, is that they're afraid of rejection.
Yeah.
Well, let me help you solve a problem if there is a problem, right?
Yeah.
And nobody needs to know, right?
Yeah.
So
Right.
it's between us, and that's the oath we take, and we're bound by it, right?
Sure.
So we don't share.
So we can. We're bound to the law, just like the HIPAA law and the
Exactly.
medical.
Like a
we have the
doctor.
Grant-Leach-Bliley Act, where we cannot disclose our information.
Yeah. And I think it's important that people know that, there's privacy, and, everyone goes through some things where maybe they missed a payment, 30 days, 60 days, whatever it might be. You guys are there to help them. Anything else futuristic wise? Adam, you talked about AI. But what do you guys think in the next 6, 12 months, 24 months? Is there buzz of new products coming out? Is there buzz of the rate? Like what does the consumer need to start paying attention to down the lines of mortgage, and how they help them get themselves into a home buying situation?
I feel like that was just a broad question.
Yeah.
Yeah, and I love
Question
it.
upon question.
Yeah. So I would say, what's coming down the pipe, Jen? At the end of the day, here's my take on that. There's a lot of talk of rates coming down, right? But at the end of the day, I feel what I love about our industry, I feel it's coming back more to the people-to-people business. The consumers do want to talk to people. They don't want to do everything online. It's not push button, click loan, get approved.
Yeah.
Like, so many things that we saw for so many years. So they want to have those conversations. We're getting people coming back into the office again, sitting down, talking to us. But at the end of the day, I think it just comes down to, when it's time to buy a home, what are the other reasons why you're buying a home? What does it create? I know for me, growing up in a kind of a weird situation as a child, when I bought young, it created just security for me. It created, I was proud. I was able to provide something for my family and my young son. And it was like, wow, I did this. Like it made me grow as a human so much faster by just that pride and ownership. So look at when you're buying a home, because what's the alternative, Todd, of buying a home? Rent?
Either rent from somebody or
your mom
buy
and
for
dad's
yourself.
basement.
Yeah.
And maybe rent's okay. I guess I just look at things differently. That's a fact that you can't have assets, right, without having an asset.
Yeah, the study of net worth of people that have home ownership versus not,
right,
is substantially different.
Substantially. The way I look at it is, it's a forced savings account of anything. If you bought a home for $300,000 and 30 years go by and you pay it off and it never appreciated, you still have $300,000. If you rented that whole time and now 30 years later, what do you have?
Zip.
Zip.
Zero.
And not to mention, you get to tax write off a little bit, right, with the interest. So maybe some savings on your taxes.
Compounds. Right?
Yeah. You know, so.
And circling back to a conversation I had with you last week and back to Granite, and why I'm here and why I love it is, and it's only been 3 days today. Is that I called you.
Congratulations, by the way.
Thank you. I had a conversation with you. I called and said, hey, I have a construction client and I need this, this, and this. And you said, well, I don't know, but let's do it. And so not that we can create our own product and just create an interest rate that we love, but I really love that you're like, hey, we're creating things and we're doing things and we'll change it if the consumer wants that.
Yeah.
And so don't miss the boat on that. That's huge.
Yeah.
Of like, it's not a cookie cutter. You don't build cookie cutter homes. We can tailor it and be creative to fit that client's needs.
Yeah.
And that's really
the power
cool.
of the bank. And that's what I'm loving right now.
Right.
And seeing that and being helping being in charge of that is I took the feedback from the field. We need to change our construction lending product, get more aggressive.
Yeah.
And we did that. And we rolled it out.
Yeah.
So thank you for that, Jen. I appreciate it. Keep
It's
it coming.
just a cool thing. So
Awesome.
Well, in addition to that too, I think it's worth noting that as a part of the bank, we have the ability to do loans in all 50 states. So our customer
Buying in Florida.
Exactly. I mean, anybody that's, doing any sort of, snowbirding it or whatever the case may be, that, yes, we're local and we love being local, but to be able to offer that service nationwide is great too.
Or I'm at a family gathering. I'm talking to my brother and sister, and I said I had a wonderful experience.
Apply. Yeah, I mean, it's just that ability to do it. It's just we all have choices. Consumers have choices. Why you go where you go. That's completely up to you. We just want to choose us because for all those things we talked about previous. Right.
Wonderful. A lot of things changing. A lot of things coming. Hopefully we see some softening of the interest rate coming up. I'm sure the Fed will do something here as we approach the end of the year, and we got good old elections coming up in the country. So we'll see how that goes. But Adam Palodichuk, thank you. Jen Axtell, thank you.
Thank you,
Josh
Todd.
McCarthy, thank you.
Thanks for inviting us, Todd. We appreciate it.
Granite Mortgage, a division of Granite Bank. How do I get a hold of you? What's the quickest way? Where do I go?
JoshMcCarthy.com.
Okay. So
I'm working on my .com.
So JenAxtell.com, AdamPalodichuk.com.
AdamPMortgage.com.
Okay.
Yeah.
And just look up Granite Mortgage and we'll find you. So,
You got it.
if you're whether a consumer, a realtor, financial advisor, divorce attorney, you guys can service a lot of different clients. So thanks for coming on Roof to Curb, and we'll see you all soon.
Sounds good.